Hello ladies and gentlemen, and welcome to this week's Australian Strategy of the Week, which is titled How to Find Income Using VectorVest. What we're going to do is analyze and select the best dividend-paying stocks. Now, history has shown that when it comes to building long-term wealth, investors who accumulate shares in well-managed companies with sustainable business that pay a steady, growing stream of dividends are usually successful. Share dividends are a major component of stock market returns. They can reward patient investors who are waiting for share price growth to return. They reimburse shareholders for risk funding costs and potentially even hedging costs. Dividend income investment is a proven method that focuses on selecting shares that provide reliable and growing dividends. Now, dividends by themselves are cash distributions that many companies pay out regularly to shareholders from earnings. They send a clear, powerful message about future prospects and performance. A company's willingness and ability to pay steady dividends over time and its power to increase them provide good clues about its fundamentals. And Australians love the dividends, and why shouldn't you? They can provide you, as a retiree, with a regular flow of income. They can help fund outside expenses, or they can just give investors more capital to work with. The franking credits that many companies attach to the returns make it even more exciting. The franking credits simply reflect the amount of tax that the company has already paid on its profits. So for a 100% franked dividend, the company will have paid its 30% corporate tax and distributed the remainder to shareholders. You as the investor are then responsible for paying any extra tax to meet your own individual tax obligations. Now, at last count, we've got over 850 dividend-paying shares available in the Australian market. And what we're going to do is show you how to use some of the known dividend indicators that can be used for any type of investing, such as the annual dividend paid, expressed in VectorVest as the DIV, that's in dollars, and the dividend yield, which is that same dividend paid just expressed as a percentage. The proprietary indicators for VectorVest are the DS, which is the dividend safety, DG, which is the dividend growth, and the YSG, which is the yield, safety, and growth vector. Now, we can look at this as an income stream for those of you that need to start drawing some income out of your portfolio right away. And I'm going to show you a couple of graphics that just illustrate the power of dividends, and particularly the power of reinvesting the dividends. So this graphic covers a 40-year time frame and has the blue and red bars on there. The red bars represent an initial investment of $50,000 that was put in and grows over time at about a clip of 8% per year. And this would be representative of somebody taking all of the dividends out of the portfolio over that 40-year time frame. You can see that you would grow to roughly a $1 million investment. The blue line represents that same 8% growth. However, we're averaging in some dividend yield on top of there, bringing the total return per year up to over 11%. And growing the portfolio to over $3 million. Now, of course, it would never be this smooth, but the math holds true. For more realistic perspective, here is charts of a $10,000 investment invested in the Australian market from 1992 through 2012. The blue line represents the person who took the dividends out, and your $10,000 grew up to a peak of over $40,000 initially before coming down with the market, and now, or at least at the end of 2012, was eking its way back up to the $30,000 mark. Reinvesting those and accumulating the dividends took your peak to over $75,000, and even with the market's pullback, you're still upwards at $60,000 of a total portfolio. So let's move over into the VectorVest program and see how we can analyze and select only the best dividend stocks. We're in the Viewers tab in VectorVest 7, and I've selected Stock Viewer over on the left side of the screen. And we're not going to go back in time and look at anything. You can see that we are looking at 28 March. So we're looking at today's date. All the stocks listed in front of us are what VectorVest considers to be the best stocks in our database as ranked by the VST vector. Down at the bottom, I'm going to grab this scroll bar and I'm going to move everything over to where right next to the symbol we begin with our dividend analysis. And again, it does begin with just the dividend paid, so Select Harvest pays an annual dividend of 20 cents. In relation to their share price, that's a dividend yield of 2.98%. And again, this is information that you can collect from several sources. The real power of the VectorVest dividend indicators begins just to the right with that DS, which stands for dividend safety. Our dividend safety is the assurance that the company will continue to pay the dividends that they're declaring or the dividends that they're dangling out in front of you as the investor. This moves on a scale from 0 to 99. And so the higher up towards 99 you see the number, for instance, Select Harvest here at 93, you can feel very safe in the assurance that you're going to get paid that 20 cents per share or collect that roughly 3% yield by investing in this company. Next to that, we have DG, which is dividend growth. And that's just what it sounds like. We're looking at how much is this company growing their dividend. And on average right now, Select Harvest is growing their dividend by 15%. And I'll show you exactly where you can get some more information about these indicators in just a moment. And then the column right next to there is that all-important YSG vector. I told you we're in the stock viewer and we're looking at all of the stocks as ranked by VST. A lot of our subscribers are very familiar that VST is our value, safety, and timing vector, meant to give you some assurance in the companies you're investing in are going to give you a chance for capital appreciation. Well, we apply that same vector analysis to just the dividends, looking at the yield, safety, and growth. This is also cast on a 0 to 2 scale, so the higher up above 1 and closer to 2 you see this number, the more effective your dividend yield, safety, and growth is going to be. And Select Harvest is at 1.3, which we would say is a very good yield, safety, and growth vector. So if you want more information about how these definitions work and how you can understand them, you can just click on a full stock analysis report for any stock we have in our database. And as you scroll down through the detailed analysis, there is a section titled Dividend Information, which will tell you all about what is a dividend, what is a dividend yield, and then the ones you may be looking for would be that full definition of dividend safety. And looking here at SHV, it has that dividend safety of 93, which we would say is excellent on a scale from 0 to 99. And as a little bit of extra information, it does go on to say that stocks with DS values above 75 typically have relative safety values well above 1.0 and earnings yield levels that are much higher than dividend yield. And that stands to reason. You don't want to see a company that's promising to pay out more than they're earning. And so we'll look at that in just a moment as well. Here is the dividend growth rate. And it is a forecasted annual growth rate of the company's dividend based on historical dividend payments and their dividend predictability. SHV has a dividend growth of 15%, and that is above the current average of 4.74% for all of the stocks we have in our database. And then there is a full definition there for YSG, which we explained. If I go back to the stock viewer and just scroll over to the left a little bit, you can put the earnings information columns in play as well. So we'll have earnings per share and earnings yield. And what you want to see is that the earnings per share of 62 cents is higher than the dividend paid of 20 cents. And you'd like to see the earnings yield at 9.23 higher than the dividend yield. And so I'll just take the top 5 stocks we have in there as of Friday the 28th of March, and let's take a look at them on a graph. This is a 1-year graph with the price of SHV on the top and their earnings per share shown on the bottom. And you can see, for one thing, this company's had a very good year with the stock price moving up overall. And down below, as the earnings per share continues to rise, as an investor in that company, you can expect your dividends to be not only paid, but increase and give you a better paycheck the next time they're due to pay out. And we can toggle on the dividends here on the graph, and you will see yellow flags come on. The X means that was the ex-dividend date. That's when you needed to own the shares in your account in order to receive the dividend. And the P is the payout date. So there's been 2 different ex-dividend dates and 2 payout dates in the last year for SHV. Very similar story for BT Investment Management. Overall great growth for the share price, and the earnings per share is stepping its way up as well. And you'll see similar from TPM. Magellan has been at the top of our list for quite some time now, and their earnings per share appears to still be growing. And the last one we have there is PMV. Not as stellar a stock performance, but the earnings per share do look preferable. So right here in the stock viewer, or anywhere you are in the VectorVest program looking at a list of stocks, you can do your own dividend analysis using those columns. Another way that we can search for and find these good dividend paying stocks is, of course, by using our Unisearch tool. Now, dividend investing is typically thought of as being a bit more conservative than some other forms of investment, so we're going to open up both Searches Conservative and Searches Retirement. Just to give you an idea, the very first search we have under Conservative is called Conservative. Now, it only has 2 parameters going for it, looking for RV and RS to be at certain levels, but all the stocks that meet those parameters are going to be sorted by dividend safety descending. So again, just bringing up to the top of the list the ones that have the highest assurance of paying you their dividend. Dividend plays, also in the conservative group, takes it a bit further. You must have an earnings growth rate of greater than 11%. Of course, that should help out with the dividend. It does want a minimum dividend yield of at least 3%. And all of these stocks are going to be sorted by the VST plus YSG vector. Down under Searches Retirement, we have shown several times in the past year the power of this dividend elite search, and it is looking for dividend yields of at least 3%, a VST of at least 1.35, which is an excellent rating, and a YSG vector of at least 1, and these will be sorted by VST. And if I click on the Run Search button, as of today, we're only going to get 3 stocks out of our entire database that meet those parameters. So the more restrictive you get with the type of parameters and search criteria you're putting in, the more you're going to whittle down the list of stocks that you're going to have to choose from. So since we're in a market downturn right now, I will have to take us back in time a little bit. And of course, dividends being paid sporadically, either quarterly, semi-annual, or on an annual basis, the longer period of time that we can show you, the more opportunity you're going to have to use share appreciation and dividends to your advantage. So if I open up our date calendar and take us back to 2013, we had a confirmed up that was issued on July the 12th, as indicated by the green square in your calendar. So I'll run the search on that day. It still only found 6 total stocks that met all the parameters, but that's okay. What I'm going to do is quick test those 6 stocks from the confirmed up in July until this confirmed down date, which came on October the 7th. And again, that's indicated by the red square on your calendar. So when I rerun the test, you'll see that those 6 stocks, on average, appreciated 15.5%. In roughly a 3-month time frame, that's fantastic growth, with CWP leading the way at over 30% growth in that time. We can open up the stock graph, and once again, if I toggle on the dividends, you'll see that you did receive a dividend during that time frame. This is before the confirmed down came into play for CWP. LCM, you also collected on. SKE paid again just before the market turned down, as did BRG, WPL, and CCP. So all 6 of them, had you invested in them, would have paid you the dividend, and you can add that to the overall 15.5. And once again, anywhere you are in VectorVest where you see a list of stocks, you can scroll over to do your dividend analysis and see both the dividend paid and the dividend yield amount. Well, I hope this has been helpful. We cannot say enough good things about looking for and finding the best dividend paying stocks. If you should have any questions about what we've shown you tonight, please feel free to give us a call at the number on your screen. And thank you for joining us this week.